27th. Let's get started for today's poll report. Let's dive into the risk disclaimer. We know there's risk in trading. Please always use trade capital only. Do not trade with money you cannot afford to lose. You know the deal. Social media, make sure it's really me. Best place to find me is right here on the YouTube channel, youtube.com/Chris Pulver. Verified Twitter account at Real Chris Pulver. Also, Instagram at Real Chris Pulver. I don't send messages to you. Just want to make that very clear. That's been happening quite a bit in the Discord group. People are asking me like, "Hey, is this you?" If it's not, if it's not you asking me questions directly, you're not going to get a just random message from me. So just so you know. All right, so just make sure that you're following me for reals. All right, let's jump into the charts. Had some alerts go off. We have a light earnings week this week. It's 101 companies. I didn't really see any notables that I liked necessarily. Snowflake could be one. Dollar Tree, Foot Locker, Petco, Salesforce, Express for retail, Kroger for defensives and groceries, Big Lots for retail, Ulta for cosmetics, Dell Technologies for a little bit of tech. I'm not sure if that's an Intel play, kind of like semiconductors or chips and computers, stuff like that. But a light earnings week overall, light volatility overall. Same thing last week. We had very light volatility. Look at the candle from last week. So we closed out our strangle on the SPY for profit. We do have a couple of strangles going this week for Friday on the IWM as well as the DIA. I'm probably going to look at some strangles on the SPY as long as it's priced accordingly. We still have some gaps to fill if the market's going to pull back a little bit, but I think this market's in kind of full melt-up mode. We might have a little bit of a pause, a fade. We don't have a lot of news going into the next couple of weeks. So this week gets us through the first to wrap up the month. We don't have non-farm payroll. That's next week on the 8th. So things are pretty light. I just expect the market to kind of continue to oscillate, lower volatility, lower volume. The 11th through the 15th will be the next kind of big volatility window that we have over US CPI data as well as the Fed with a Wednesday rate decision on the 13th. So looking to trade accordingly, try not to overtrade. Currency-wise, this morning I had a chart alarm go off. The yen is a little bit stronger. So is the Aussie. I had a chart alarm go off on the Aussie dollar that we hit 6,600. I've got a chart alarm set at 6,650. I'm looking to protect a big group of profits. I've got some add-on trades in on the Aussie dollar. I've been buying it since this indecision down here around 6,400. So bought quite a, I don't know, I think I have 4 positions in on the Aussie dollar, have been buying it, spaced out pretty evenly, about 50 pips, and then had some add-ons in this recent dollar run to the downside. So let's go to the dollar index. We're down to 103.42. On the weekly chart, the recent low was as low as last week, low showing 103.21. Is there more to the downside on the dollar coming? We're going to find out. It would make sense that if we're going to continue to see a bit of a melt up, maybe the S&P wants to test the annual highs, so which would be from July. Let's have a look at that for a moment. So July highs were not that far away. They're right here. This was end of July, early August. Both on the NASDAQ and the SPY. The SPY tested, or the SPY is close. The Qs have already hit. So if you look at the NASDAQ, we already hit the highs. Okay, does that mean that we have a chance for tech here? If we have any dips or pauses or pullbacks and we get to these all-time highs, melt up will likely put us into that scenario. I think yes. And realistically, if this is a swing, this is low, this is high, we pull back 30%, we hit the highs. Either this is a broadening pattern here where this thing doesn't go any higher, or we have a melt up into these higher Fibonacci extensions like the 18127 just above this high. Will the market celebrate, all-time highs? I'm sure it will. I just don't know how sustainable this run is. I think that if we have a melt up and a test of all-time highs in the S&P 500, that would be probably the round number at 500 on the SPY, 5,000 on the S&P. If you're trading SPX, look at 5,000. So I think a pullback is needed. Technically, it's just, can we get it? I'm not going to force it. I might put a high reward to risk trade on over the next week or two. See if I can take some stabs and see if this area gets filled. But if we just continue to oscillate where, this was all through CPI. Big gaps post FOMC, big relief rally, big kind of kitchen sink rally, broad market rally, and then that's it. There's an absence of sellers. There's not really forced movement right now. There's going to be forced buyers in the market, that's for sure, which is why I think this melt up can continue. All right. Let me log into YouTube, say hi to everybody, and let's take some requests and charts and keep going. All right, Angela, good morning. Jacob, good morning. Let me skip all this stuff. All right, Chris, good morning. Gary, good morning. Larry, Jan, Perry, David, Ruthann, FK, Giza, Charles, what's happening, everybody? Happy Monday, and good morning. And like I said, I hope everyone had a great holiday weekend. Got back late last night. Interesting flights from Salt Lake City to Chicago, Chicago to LA, LA to Salt Lake City to come back. Got back around midnight last night. So yeah, it was quite the tornado trip, but totally worth it. Nice to see some family. So back in the grind mode now. Try to finish out the year strong. Let's go Discord. I already posted that. I'll post the chat for anybody that's watching this. Most of you are already in it. I see a lot of familiar names. There's the link. And requests are open. So if you have any charts, currencies, stocks you want to take a look at, any plays, any strategies, let me know. This week, like I said, my expirations, I have a 12-1 expiration on the IWM. I have a 12-1 expiration on the DIA. I'm looking to see if this goes somewhere. So 181, get back to the highs, get paid on that. Goes down to 175 or lower, or even fill in this gap, get paid on that. We're going to find out. You know, this might be low, high, higher, higher low to higher high. This might pull back again. Maybe this 175, 174 area. Try to take a few bucks on this $2 debit. But that's out to Friday. So if we have a decent move this week, last week on the IWM was again pretty quiet, as was the SPY and the Qs going to the holidays. So a decent run, you know, up or down. This chart is set at 170.50 for a gap fill. This one's set at all-time, well, not all-time, recent highs at 185 over the last couple of months. So if we have a gap fill or at least attempt to get to the low 170s, then this should turn into a nice, you know, maybe a $3 to $4 credit, which I'd certainly take. And here's the DIA on the weekly. Again, very small week. Last week we had low at 349, high at 353. It's about a $5 move. It was 353.95. So just shy of a $5 move on an average of 8. So you can, like we talked about, quieter, lower volume, lower volatility. I've got a 354 by 347. So I'll be watching to see if we have something this week, some type of movement. If we don't, I'll eat it. But what I'd like to do is kind of pair that with maybe some butterfly spreads and try to get some high reward to risk setups where if price comes back on the daily and fills this gap area, I'm going to look to see if I can, you know, maybe butterfly spread this by $3 to $4. And if I'm right by Thursday or Friday, maybe have this thing pay out, you know, 7 to 1 or 10 to 1. That would make up for some potential strangle debits. So that's what my plan is for some equities. I still like a couple of stocks that I'm in, you know, from A to Z, looking at my portfolio. I did some income plays last week. I basically, I have some shares already of Alcoa. I put in a couple of puts. I did the 119 of, that's January of next year. I did a $20 put. I just sold it. It's a naked put. I will take more shares of Alcoa if needed, but if it stays above $20, which is quite a bit higher, I mean, we'd have to drop another, from current price, to drop the 20 bucks, we'd have to drop another 23% on Alcoa. I think that's pretty safe. I collected 94 cents on that. So I'm looking at a couple plays to, you know, maybe make a few $100 and just generate some safe income. The other one I'm watching is BITO, which is a play on Bitcoin. I like this one longer term. Listen to an interesting podcast this weekend. I'm going to do a video this week for my YouTube channel on the Trader's Path to 100%, and share this kind of new updated allocation that I thought was really interesting. It's essentially a 50-30-20 as opposed to what traders or investors are used to hearing at the 60-40 percentage. So you have 60, whether that's equities, 40% bonds, or it's flipped around for age and retirement. Really interesting, you know, thoughts on going to like a 50-30-20, which I'll explain in the video what those allocations are. But we're sitting at 18.41. I put in a bull put spread, just looking for some income. I did like 5 contracts at 15 cents, so just making a few bucks here. And I still have shares of BITO. I still have shares of GBTC. I still own Coinbase. And we're going to look to see if GBTC, there we go. It just switched over. There we go. So GBTC continues to outperform from the lows at $8 to $30. This thing has outperformed Bitcoin, which I think has been pretty nice to have in the ownership pocket. 283, and Bitcoin's up over 100% this year, but 283 on the outperformance of this grayscale Bitcoin, which is kind of nice. Again, pullback, so we pull back towards 25 or less. I'm looking to buy some more. The only problem, I don't love GBTC because you can't play options, which is why I played ProShares, which is BITO. So this one I can own the shares. This one I can also trade options. I have a long call all the way out to January of 2025, and who knows if we get a nice, 6 month run. Let's say Bitcoin is making a run towards 40 some thousand, 50 some thousand. Maybe we're retesting highs at 68,000. That BITO 275 debit might turn into $10 to $15 worth of credit. So nice little return there if we have a big run. But I'm looking for a pullback still technically. Okay, silver, I'll take a look at that. Yep, I see your request there, John, John Mark. Gold as well, Charles. Okay, it's in the Market Huddle Plus. Here, I think it's Harry Tressman. Let me see if I can find it. This guy right here. No bad bonds, just bad prices. Harley Bassman. Harley Bassman. That episode, it's only 32 minutes, but man, that guy, it's just an old school Bond guy. Talks a mean game, but interesting path to where he's at now. So that's the one I was talking about. Okay, so we're good on crypto, Bitcoin. Like I said, I'd love to see a pullback towards 32 or 31. I will happily buy some more. I'm gonna probably carve out another $2,500 or $5,000, throw in another position on Bitcoin, and just get myself positioned where I'm kind of digging the heels in around this 30K mark. I can also play it in the equities game where it's like if I have a pullback, I can own shares of BITO, have some long puts to protect myself. But otherwise, I'm thinking this big break to the upside needs a pullback. Technically, I hope we get one so I can buy some more. Let's take a look at some uranium. URA retesting some highs, which is nice to see. URNM retesting some highs, which is nice to see. Gold and silver. Silver performing pretty well. This is gold at 2011, so we're up above that 2000 handle. Be a little bit careful on gold. I mean, I still think technically I'd like to see a pullback if we have something like this. If gold just fades a little bit more, some more indecision on gold would be kind of nice. But I still like long as low as you can buy it. I'd obviously like to be long. I don't know if gold is going to be making this huge, ridiculous run above 2070 or not. But I'd rather be long than short at this time. Just saying. And if I'm short, I'm gonna have a stop loss. And if I'm long, I'm gonna have a stop loss. I mean, we have a huge range on gold going back a couple of years. And so there looks to be, some limited space to the upside unless we have a, full-on breakout, which, has some ramifications for the dollar, will mean something when it comes to inflation. The way that gold gets stronger, in my opinion, is a weaker dollar and lower inflation numbers. I think that yeah, I mean, lower inflation numbers than the Fed. If the Fed is starting to cut, which they probably won't do until May of next year, probably May or June of next year, are we going to have a full-on recession? Is that going to be a reactive monetary policy next year? I don't know. All the stuff with the Fed has kind of been cooked in, baked in, talked about. Powell's message is roughly the same. The guy is pretty much determined to extinguish inflation. So I don't think the Fed's policy or the tone is going to change much. The market's looking for anything it can do just to either, one, ignore the Fed or price stuff in ahead of time. So we'll see. But anyway, I would rather be, long than short right now. If I was going to take a stab at a short position, to be here around this 2070 handle and then look to see if you can have a tight stop and get paid on that. Otherwise, if we have a chance to buy a dip, if it pulls back and goes sideways, just a little bit of a bull flag from this run here. If it's a bull flag, look for a pullback around 1960, 1950. I thought we'd have a pullback around 1920. I don't think we're going to have that. I think it's going to be sideways. So if we get a pullback in here, I'd like to get long gold going into those highs, eliminating risk. And if we get a big breakout, congratulations, you're breaking a 2-year high. But we'll see what it does. Silver, I still like the technicals on silver better. Silver's had a really nice run lately and looks to be almost outperforming. This structure is kind of nice to see as well, that we're breaking, that little correction. So if silver has the legs to continue to work higher, just take out a high, come back and retest highs around $29 to $30. One thing you could also look for would be something in this area. If we have a break, we have a pause, I'd like to see more silver. So 28, 29 bucks, that's my plan. I have shares of SLV, XAG. I don't trade. Since I'm a U.S. trader, so I just paper trade some of the other correlated assets like SLV in my equities account. Trade a lot of options around it. Trade stocks and own the stocks as well. Here's SLV. SLV at 22.62. I have a bunch of credit spreads actually. I think I have the 22 by 21s and the 23 by 22s. We'll take a look at those today at 10 a.m. and see. Expiration wise, we have some of those out to the end of the year. We have some of those out to Q1, and they should be in profit or close to it. We might just want to start protecting them and just see if we, have a pullback or some gaps to fill. I want to try to take some profit if I have it. Let more time play out. Let silver get a little bit higher. David asked, do you see the Fed lowering rates before they hit the 2% mark? Yes. Yeah, I mean, I don't think the market's wrong with this assumption that the Fed's going to, look, they're going to maintain some type of restrictive policy. The reality is if the Fed continues to see CPI inflation tick lower, then yeah, they can cut rates in May and June. I don't think they're going to get below 2%. I think that if you look at the inflation readings, they're trending lower. I'd say a good print for December would be if I go to, let's go, I guess let's look true inflation at first. If we go to December and go to U.S. inflation, we hit a low back here in June and July. We are starting to fade off of this. A little bit of an indecision right now in the whole, aggregate of inflation. Are we going lower? We're, 2.85. Now, again, this is not what we typically see on the calendar when we have CPI news on the 12th of December. All right. But by the time the Fed starts cutting rates, I do not think that inflation is going to be under 2%. I think that being sub 3% is very likely. And that's what I was going to say for the month of December is if the print, if we go to the calendar, it's going to be December 2nd or December 12th. If we go to next week and go to the 12th right here. So there's no forecast right now, but if you look at year over year, the last print we just had was a 3.2% year over year print. So I could see the market celebrating a sub 3%. But you, again, think about it. I mean, 3% is a long ways from 2%. And inflation is not just something that goes away, gets extinguished for 1 month because it prints below 2%. Like, let's say we printed 1.95. Is inflation dead and done and never coming back? No, that's the problem. Like, that's what Powell's struggle is like, if he allows the market to get overly excited or lets just all of the, all the components that go into inflation, if the market gets overly excited or if consumers get overly excited or investors get overly excited, there's all sorts of stuff that's like, it just seems like this big fragile mess of a lot of different circumstances or outcomes. I mean, if I don't know. So to answer the question, no, I don't think that the Fed will need to see, inflation below 2% before they cut. I think that we would probably cut as expected because the fact of the matter is if the Fed continues at 5.25%, 5.5% interest rates and we're servicing our own debt, our debt right now I think is being serviced around like $800 to $900 billion a year because of what we owe on trillions of dollars in debt. I mean, we've added essentially $6 or $7 trillion since COVID in 2020. Right? So I mean, we're 120% debt to GDP. The numbers are pretty outrageous, and it's a problem. And the Fed has had this amazing ability to kick the can down the road, and it becomes a generational thing. We'll just borrow now, and we'll let it be worried about later. I mean, maybe at some point that becomes a problem. You think it would be now, but it's not. I mean, is anybody is anybody really talking about the debt ceiling? Is anyone talking about, government shutdowns? It's like not really. Why? Because they always avert a shutdown typically, or maybe they have temporary furloughs, but they get by if they lift the debt ceiling, they do temporary budget passes, and they just continue to do short-term, funding. But what gets a little messier is like if you're watching these bond auctions, there is less and less interest at filling these bond auctions, or you're filling them strictly short term and then having to service them short term, which is at a much higher rate. So it's I don't know, it's really going to be an interesting landscape to navigate over the next 6 to 12 months because interest rates are really finicky. We could have the 2 and the 10 year, get steep again. We could have them go higher. We could see if maybe they've peaked and all of a sudden the yields start to drop because the Fed's anticipated to cut next year, and then bonds start to rally. If bonds are rallying at 5%, you 4.5%, that's going to make some investors happy. But then you think about duration. I mean, think about somebody that's holding a 30-year bond right now. I would hate to be holding that and say like, well, if I want my money back, I'll see you in 30 years. No, thanks. So I think most bond trading and bond volatility is going to be short term. So, anywho, Charles says silver and euro pound teacher teaches all traders patience if you lack it. Yeah, that's true. Where's the euro pound at? Euro pound? Yeah, I mean, this pair moves maybe 40, 50 pips a day. Lots of range bound trading. This is why I let robots trade a currency pair like this. Doesn't move a lot, pretty efficient, doesn't run away. Obviously, it has its moments like this. During this, this was the bond crash that we had in the UK, and the pound got super weak, the euro got super strong. That was just because the pound was really weak and it, flash crashed up and then came back down and rebalanced. So since then, it's been extremely boring within about a 3 to 400 pip range, going back to October of last year. But yeah, lots of patience. Not a lot of volatility either. So if you want to trade some efficiency and some boring, which isn't a bad thing, you can make money in boring. I like making a lot of money in boring. It's good. Sudden reverse, market crash. Yeah, we'll see. Let's look at the 2 year. The 2 year bond is sitting at 4.93. The 10 year sitting at 4.49. So we're still in an inverted yield curve around 0.5%. It is improved a lot. But since we've had this top at 5% in the 10 year and we've gone down, your 10 year bonds, which I think is the IEF. Yep. The IEF has been up. So when we had our peak rate at 5% yield, there's your bottom here around 89 and rallied up a few bucks. So I still, I mean, it's such a small movement percentage wise. I mean, I'm not overly excited about, oh, look at that. I've got this awesome 4% movement off the lows. I mean, with dollar strikes, I mean, heck, we're barely in profit on one of our, we have I think we trade the SHY. I mean, I've got an 82 by 81 that right now is maybe break even. I mean, this whole area, it's like, here's lows at 80, 60, there's highs at 82. That percentage move with dollar strikes just makes it pretty tough to trade. I mean, it's a 2 1/3% move. So, I mean, bonds are not my favorite unless you're holding them and you're holding the maturity. I mean, I've done more money market instruments and I've done short-term treasury that's a 3 and 6 months to get the highest yield possible. But that's about it. So, anyway, like I said, there's all sorts of stuff that we're gonna have to navigate. It's fine. We'll figure it out. And I'll do my best to find direction and see where we can go. And whether it's we need areas to hide out, we need areas to protect, we need areas to be diversified and make sure we can generate some profits. We'll do all that. Okay, so we'll see. But as far as where the market's at right now, it is Q4. This wasn't a surprise to see the market rally. We had a nice head and shoulders corrective pattern. We called this. I mean, this was pretty straightforward. This was a head and shoulders. We had a high, low, lower, high, lower, low. Pulled back and retested the neckline. Did the same thing with symmetry right there. Once we hit that symmetry, rip. And it was right at the FOMC. FOMC and CPI and all that news coming into that first part of November was just an excuse for the market to rip the way that it did. I was not surprised. This rally here, I think, was 10% or close to it. Yeah, about 11% from low to high, which is pretty awesome. And I was fortunate that I turned my account up around 18%. And that's the point. I mean, that's why we trade the way that we trade, trying to generate more returns than what the broader market can give and beat those benchmarks. Okay, we good on gold? We good on silver? Yes. Currency-wise, again, like I said, vertical axis pretty light. Japanese yen getting a little bit stronger. Is that turning the dollar yen lower? It is. We got filled on a pullback here. It looks like about a 50% pullback from this high low. If this continues, and maybe the Bank of Japan is going to do something a little sneaky, maybe through the end of the year. If they do, it'd be nice to see at least this. You know, if we break that big intervention low, then I would at least measure. I'd probably just measure that swing, measure to symmetry, pull back, get a fifth wave, just see if we can take out some recent lows on the dollar yen. You know, if all this structure is breaking, if all this trend line is breaking, I think that technically looks a lot better for the dollar yen. And maybe it's really not the dollar, or I'm sorry, maybe it's not the yen as much as it is the dollar. If the dollar gets softer, you know, yen falls. But we have pretty nice structure in there that's been broken. So I'm looking for a high, low, lower low, pull back again to this bigger trend line, outer trend line break, maybe one more push. If I go 5 waves, this level, take out some previous lows, probably going to lock in some profit on this 140 handle. I know it's possible we can come all the way back down to those lows from 2022, which would have been late 2022 into early 2023 when we bottomed out here at 127. It's possible, right? I mean, have this high hold. Is it possible that we have this big type of fall, same type of thing? Maybe. Everyone is wondering if and when the Bank of Japan is going to change their policy, you know, change their yield control curve. I don't know, but I've said it a lot for the last several months. I'm sick of waiting to see, you know, is the Bank of Japan going to do something? Just trade the yen pairs with caution. Trade what you see. Don't trade long term. Don't scale in. Don't call tops and bottoms. Just trade what you see. Trade smaller because the yen is not exactly the most technically obedient currency right now. That's all. Everything else looks okay. Let me see. I'm going to check in really quickly on my. I'm going to check in on my portfolio builder, see if I can. I'm trying to double accounts, and I've got New Zealand CAD running into profit, Aussie CAD running into profit, Swiss pairs running into profit. Yep, New Zealand CAD's looking pretty good. This should be up a few hundred pips collectively. Aussie Swiss, it's behaving to the upside, looking better. Euro Swiss sideways, but a pretty solid looking double bottom pattern here at these lows at 94.50. So if we have this level here, left structure, looking to see if that reverses and continues to go back up to retest this high at 101. That's 1.01. Let me find my. Get logged in. That's Euro Swiss. Pound Swiss. Nice. Got filled on an entry around 108. So that's up quite a bit. The break even position should be around 109.42, I think. New Zealand Swiss looking a little bit better. Dollar Swiss might be still in a pullback mode, which I'm totally fine with. I'm going to hold that dollar Swiss long. And that should be about it. So should be looking better. Just going to spot check it really quickly, and then I'll switch over to equities on demand for the trading room. Before we go, would you do me a favor for everyone watching the video? Will you click on the thumbs up button for me? Let's get some good saturation with the number of watchers to the likes. Appreciate that. And let's spot check the charts. Drawdown's a little bit contained. I'm up about 80 bucks in rollover costs. I've been paid by holding positions, so my current balance is 10,079 for a $10,000 account. I'm up 80 bucks, like I said. Current active floating P&L is 9872. I have the New Zealand CAD up 164 pips. I got the pound Swiss up 175 pips. Got the Euro Swiss up 76 pips, and I'm nowhere close to taking any profit. Nowhere close. The one trade I want to look at as well is CAD Swiss. I think I skipped that one. CAD Swiss is sitting here at the lows. I am super anxious, not anxious, super excited actually to see if and when this thing will make a bottom. If we can take out a low here, I will be adding to the CAD Swiss for a trade like that. Even if this one might be a short-term, you know, kind of non-FIFO trade where I can get in around 65, take a stack of orders here and take some profit around 68. If it goes higher than that, great. There's an awesome pocket all the way back to 71.50 right here. So I'm going to hold a bunch of positions that I've been scaling in here, but I think just for some short-term bullishness, I'm going to look to see if I can get that run to 68. So that is that. Okay, very good. Magpie, good morning. And good morning, Angela, good morning. Nice to see everybody. And it's nice to be back. We should have a pretty solid week. I do have a conference coming up on Friday. I'll be leaving Friday, heading out to DC, but I'll be back on Sunday. So this week's trading, Monday through Thursday, business as usual. And then Friday, based on my travel, I might not be posting a live session. We might do a video instead. I was trying to post a video for Friday the 24th when I was gone the day after Thanksgiving, but a lot of travel plans that day and just didn't work out. So hopefully it wasn't a big deal. The markets really didn't much. I had 0 chart alarms go off, and just watching, observing per usual. But nice to be back. Let's have a good grind this week, Monday through Thursday. Okay, if you have any questions, let me know. You know how to reach me. Everyone in the trading rooms, I'll see you this week. I can present a man as soon as let's switch over and jump into the trading room now. And happy trading, lots of profits, everybody. I'll see you soon. Jump in the Discord channel if you want. Love to see everybody there. Free group chat, all the good stuff. And yeah, see you soon. All right, happy trading, lots of profits. See you. Bye.